Namaste and bonjour, my friends. Welcome to the last episode of Walk the Talk. And in this episode, we're meeting Eduard, the CEO of ZKX. We'll be talking about governance and the protocol itself. So I hope you enjoyed this episode and tune in. So, hi guys, as mentioned, this is our final episode of Walk the Talk. Today, my guest is Eduard from ZKX.
Nice to be here.
Happy to see you again. How you've been?
Thank you. Pretty great. It's been a very intense week, back-to-back meetings. On Monday, we had the StarCon mixer, which was amazing. We had about more than 500 people coming in, which was totally unexpected. So yeah, really happy.
It was an amazing location and the party was also very nice. So without further ado, I guess let's start the Walk the Talk. So yeah. Eduard, why don't you introduce yourself to our viewers who don't know you and your protocol ZKX. So what do you guys exactly do?
Yeah, so basically me and my co-founders, we come from venture capital. We were based out of emerging markets, and we got to see, in real time what the problems were for, the average person living in those countries. And we realized that there's a lot of limitations on what you can do and cannot do, right? If you want to, let's say, buy a Tesla share, it's very difficult. If you're in India or Indonesia or Taiwan, it's not easy. And that was kind of the first spark. Obviously, I had been in crypto before, and I knew that at the time smart contracts were beginning to mature. You had the first wave of DeFi projects, so we sat down and we started articulating this vision on how we could create a platform that would let anyone get yield in a borderless way. So you would have equal playing ground as an institution or a big professional trader would have. And that was kind of the genesis of it. And after a while, we had seen the success of ZKX because as part of our venture portfolio, we were also investors in BitMEX. So we understood that the perpetual swap is an instrument that has product market fit. Traders love it because they don't have to think about expiry dates. They don't think about strike prices. There is none of the complexities of most derivatives. You just buy as much exposure as you want with the leverage that you want, and off you go. Well, of course, you have to think about liquidation.
Yeah. I remember the first time I found out about BitMEX. I think it was 2017, end of 2017. Yep. It was like crazy. You could log in without registration, right? Back then, and you just had to transfer a Bitcoin and 100x. You could 100x and trade.
Yep. All in. Back then,
that was but very revolutionizing.
Yes.
In my opinion, because as a trader, you could have actually everything. It was a simple and very cool product actually.
Yep, 100%. So that was the spark and the motivation where we thought, okay, the perpetual swap is an instrument that could let anyone in the world actually have exposure to any asset that they want, and create this sort of equal playing field for investment for these emerging market users. And that's the basis for ZKX, as a perpetual swap protocol building on Starknet.
Being a decentralized protocol, why are actually perpetual swaps a necessity in the space, in your opinion?
So, obviously, there is one aspect which is the thrill of trading, right? You have a profile of users that love to trade, love to experience the thrill of, taking a little bit of risk. And also, you can see that with Robinhood, right? As a democratizing force for trading stocks and other traditional assets. So you have this segment in the market. And these folks are more risk, friendly in general. And you want to give them, more of a gamified experience, a good trading terminal, somewhere where they feel comfortable trading any asset that they want. Now, In terms of the usefulness of the perp swap, I think there's a critical aspect for the entire health of the ecosystem, which is if you have, key money Legos like, let's say, STETH, liquid staking assets, or stable coins that need to keep their peg. How can you protect yourself in a way that if there's a potential DPEG event, you can actually, cover your losses, offset, the actual DPEGing, and being able to, have that protection. So perpetual swaps give you the ability to actually do that. Moreover, there is, the aspect of protection against volatility. As a trader, and especially retail in crypto, they tend to hold spot, which is great. You have custody of your tokens, you keep them in your wallet, perfect. But the issue is you cannot go short. If the price goes down, there is no recourse in terms of, you protecting yourself from the loss of value that is happening right now to your portfolio. And with perp swaps, you can actually, do that. You can go short, you can go long. It gives you much more flexibility in order to, participate in both the downside and the upside of the market. So, we see it as a more flexible instrument that can give, the average user the ability to protect themselves whenever needed, and to actually, bring in profit whenever, in any market condition, really.
Will ZKX offer other derivatives besides the prep swaps, or is there any plans ahead?
So we are creating, a new class of perpetual swaps. The idea is that options are too complex, but people love them. There's a fact that not many people know, which is about 30% of Robinhood's revenue is options trading. So that is something that, most folks assume, crypto is the area that provides most revenue for Robinhood. Actually, options take up about 30% of the revenue.
They do get a lot of kickbacks by Citadel. That's
Yes.
what I heard.
Yeah. So the retail user does trade options, and this is something that it's an assumption that even ourselves questioned in the beginning. We thought, okay, do users actually like to trade options? And I think Robinhood proves the case that they do. But for us, ultimately we think that they're still relatively complex instruments to manage.
True.
And that if we had the chance to simplify the experience while giving out the same potential upside, then we would actually hit, the sweet spot in terms of the product offering. And that's when we decided to, start researching how we can wrap different option strategies into perpetual swaps. So as a user, you trade perpetual swaps, but you have different payoff options that you can pick. So if the market is going sideways, you're trading in a range, maybe you want to pick, a straddle or an inverse straddle or some other option strategy that will give you, a certain upside, within that particular market condition. So we want to offer more options for the traders within the swap user experience, meaning they don't have to think about expiries, strikes, nothing of the sort. Now that's been incredibly complex from a mathematical perspective. But we have a paper ready. We might not implement that in the first version of the protocol.
Definitely,
but we're gonna be publishing the paper so everyone can, learn how we do it, what are the mathematics behind it, the formulas, and we're gonna implement that probably next year in a V2 version of ZKX.
You guys are very innovative generally. I noticed you've got a lot of cool stuff upcoming. One of the more cooler things that I really am excited for is the DLOB. Could you also perhaps tell our viewers what is that exactly for, because it's quite a new technology more or less.
Sure.
Maybe we can sit there. Sorry.
Yep. So we realized that there is an essential problem within crypto. And I think, it doesn't really concern ZKX as much as it concerns all of us in crypto, which is is there most apps in crypto still rely on Amazon Web Services in one form or another.
That's true.
There's an essential problem in terms of how to do heavy computation within Web3, where we still don't have a clear answer as a community, as an industry. So what happens is that if you have to do complex front-end rendering, complex data processing, it could be an order book, but it can be, an image. It can be image recognition, a social graph. It could also be a game engine. There is no recourse for you to do it in a decentralized way. So the reason why I'm talking about this is because that was the problem we had when we first started ZKX. We thought, okay, most of these exchanges are either using an off-chain order book, which is centralized. It's an Amazon Web Services instance. Or they're actually, using a virtual AMM model, which works well, but not too well. It has its own problems in terms of, slippage, how the flow of the trading fees goes to the insurance fund and creates potential risks and blow up risks for the exchange, as we've seen happen now with the Luna crash, which, some perpetual exchanges, virtual AMM, with virtual AMM models actually crashed. So what we understood early on was that the problem was not about, necessarily the order book itself, but actually about computation. How we can do this decentralized computation in a way that is verifiable, provable, and then we can bring on-chain and have it shown through smart contracts and the interface to the user and so on. So that was the initial spark, and we realized as well very early on that if you want to do a trading application that has to work at scale, and for us scale is not only Binance, Coinbase and so on, but for us scale was New York Stock Exchange, NASDAQ and so on, right? So how we can function at the same scale. And that required also a strong mechanism to bring data onto the exchange, whether it's off-chain or on-chain data. And right now, if you just depend on an oracle like Chainlink, and sorry not sorry, you're not going to be able to scale as much as you should, because the number of assets that you have available are very limited. Not only let's put aside the concerns about decentralization. If we're just talking with data feeds specifically, the selection that you have are very limited. So we needed to have a system that let us actually scale as much as we wanted to. And by we, I mean the community, right? If the community wants to have, a perpetual swap on an exotic data feed, it could be, if we go crazy on the traffic of Paris,
There will be a crazy data feed.
Yeah. But maybe that's what the community wants to trade. So our system and our architecture should be able to provide that. And that was the goal we had in mind when we designed the architecture of ZKX, which ultimately for us, the answer was to build a node network that can do parallel computation and does verify, all the processing that it does, and it proves it in a recursive way to Starknet. So basically in the near future, this node network will do recursive proofing, will send its own proof to Starknet down to L1, and it will maintain consensus, internally between the nodes. This helps us basically scale a truly decentralized order book, as well as, provide any additional computation that the exchange needs. Obviously now in the first phase of launch of ZKX, we're going to be more careful on who runs the nodes, but our vision is that throughout next year we can actually open up to make it fully permissionless, so anyone can run a node and profit and benefit from providing services to the ZKX protocol. The requirements for the nodes are actually really low, which means that effectively anyone can pretty much do it. And that's very important for us, to have this atomic node model. So, in general, for us, we solve the problem of computation by creating this node network, in short.
Well, you mentioned NASDAQ. I used to work at the bank, at the brokerage, and I noticed one thing, like the trade execution itself on every exchange is really quick, and the order matching and so forth. But everything what happens in the background with the settlement
takes about 2 to 3 days. So
Yes.
that's like the huge difference between blockchain Web 3.0 and the normal exchange, so to speak.
Yep.
It's the settlement which will also happen automatically once the trade has been done. So
That's
that's
so
also
true.
like a game changer, more or less.
Yeah, that's true. That's true. I mean, you remember what happened with Robinhood, right? That there was the order flow, the flow of orders going to Citadel, and then at some point the risk got so huge that they got, their margin post, the requirements increased to like 600 million or a billion that they had to post in collateral to actually settle all the trades that were happening on Robinhood application. So Robinhood had to quickly go and find capital, and that was kind of the debacle that happened like a year, 2 years ago.
I think they halted trading as well, right?
Yeah.
That was a crazy phase, the GameStop era, more or less, huh?
Exactly.
Wow. So do you think there will also be a future of other kind of perpetual futures, for instance, for NFTs or commodity or all kind of assets, generally speaking?
It is a possibility with NFTs and so on. Obviously, pricing still remains a complex issue. How you price these effectively. I know there's some protocols that are working on that, so you can track the floor price, and for example, then you can wrap that into a tradable instrument. For us, something we're looking at is composability in the long term, meaning perpetual swaps traditionally is something that is just literally an entry line on the order book. It's just not a token or something that is actually you can have in your own custody and in your own wallet. So we're thinking, how we can wrap it into an actual token or NFT that you can, trade, lend, or do anything you want to. Because potentially, you might want to keep your perpetual swap positions inside your ledger or, somewhere else. So that is something we are exploring, and we think it will be quite interesting as well to the possibilities that it can open up, right? You potentially can open a position, you can go long, let's say a Tesla swap, and then you can wrap it into an NFT, and then you can maybe sell that NFT or lend against it, or do anything you want. So the possibilities are endless in the future.
If we're talking about swaps for Tesla, for instance, will there be certain kind of regulatory hurdles?
So that is a question mark. We're doing work in terms of how the DAO can have its own structure, how there can be some forms of compliance. So that's something that we're gradually working internally, and we think it's very important. For us right now, initially we're going to focus on crypto assets because we believe that that's what usually has the most demand. But if in the future the community can drive towards let's say we don't want BTC, we actually want some commodity, they'll have the flexibility to choose to do so. We understand that as long as the protocol is fully decentralized and driven by the community, it's going to be up to them to decide what is available in the exchange. That's our thesis right now.
So very DAO driven, which is also important, I think, personally in Web 3.0. I'm a big supporter of DAOs, generally speaking, and if we're already talking about DAOs, could you maybe perhaps introduce us about liquid governance? Could you tell us something about that as well?
Oh, that's just a big topic.
In a short way.
Yeah, I'm torn about how much I want to talk about it in a way, because I also kind of want to wait until the right moment that we can talk about it. But let's do it.
Okay. Thank you. You just tell us what you can, you know what I mean?
So I'll start with probably, asking you a question.
Yeah, sure.
What do you think about governance tokens for DAOs?
Sometimes the distribution can be unfair, like for whales, for instance. I've only participated in a couple of proposals where I voted for something, but generally speaking, I do believe DAOs are like a higher consciousness as an organization, that every individual does play a role, like an ant more or less. So, so in order that the ant hive survives, everybody has a crucial role, right? Because it's an ecosystem, and I think it's the same in a DAO as well. Because like, if somebody contributes in a DAO, he should get his fair share of rewards. That's what I believe in a DAO, like a fair distribution, more or less. That's like my take on DAOs generally.
Yep.
And governance. Like, I think I don't know how it could be implemented, fairness at least, but I think customers, users, employees, contributors, everybody should have the exact same amount of vote for the beneficiary of the organization or the DAO, more or less. That's my thoughts in that. Yes.
It's true. It's true. What do you think about the effectiveness of tokens as a form of governance these days? I mean, there's a lot of controversy around that, right?
I think it's quite effective because you can do it on your mobile. That's what
true.
That's easy going. You can do it everywhere. Like,
true.
I had a conversation with Roy. It does at the end of the day, if you're contributing in a DAO, it doesn't matter where you are, from where you are, what's your background. As long as you contribute, that's a good thing. So
yeah, we're really torn internally with the team because we realize that okay, you launch a token, all right, you distribute it more or less in a fair way. You know, it's up to you. And in that scenario, you assume that the people who are holding the token are good actors and they're going to participate and help the DAO. The reality seems to be somewhat different from that.
That's
right?
true, though, as well, yes.
We see concentration of ownership towards whales and institutionals. We see, dumping of tokens by both the retail as well as institutions. And at the end of the day, you ask yourself the question is, who can really provide value to the DAO in the long term, and how these people or institutions or actors can actually have representation in the DAO, right? Who are your actual stakeholders within your protocol? Are they really the token holders, or are they your users? And do your users actually have representation or not? So you start asking yourself all of these questions, and honestly, at some point, you start thinking whether the token is the best way to do that.
That's true as well, yes.
So this line of thinking, brings a lot of questions around current forms of DAO governance towards tokens and how it optimizes for the best long-term sustainability of the DAO and actual value creation for all the stakeholders. Because if, your token is extremely distributed towards the community, which is extremely decentralized ownership, which is great. This is what we want. But at the same time, do these people really care about your protocol?
That's true.
Will they participate? Will they actually help govern the protocol and the DAO? And most cases they don't. So it brings a lot of questions around whether we could create a new system that will bring actual representation to the stakeholders of every protocol or DAO. Moreover, it also brings questions around, okay, we do a token launch, a few people hold the token, they start selling, the small trader, the small investor, they're suffering as well because the token price goes down. They're being, dumped on, as the people call it. So these dynamics, are also very controversial within the community, but it also limits a lot the ability for the founder to choose what they think is best for, the project, the startup, the protocol in the near term as well as the long term. So we were thinking, how we can make it happen in a way that, A, you give representation to the right people, to the people who actually use the protocol and have the most skin in the game. How do you give representation to the people who have the most skills, the best skills to actually make this, a sustainable protocol? But also, how can you launch a new DAO or protocol without actually, creating all of these problems around inflation, dumping onto retail, ownership of the DAO, of the token? So how can we make a system that solves for all of these different problems? And our thinking here and our solution was liquid governance. and I'm sorry I'm kind of going through a long-winded
I like
road.
to philosophize and talk, listen, it's all right for me.
So yeah, liquid governance in its very essential form, it's a system of smart contracts that awards representation to the stakeholders of a protocol. It basically tracks the interactions that you do with the smart contract and then will award representation according to those interactions. What that means is that if you're a user in, let's say, Compound and you're lending, you might actually want to have some form of representation in the, whatever there's any decision around interest rates or the vaults or the collateral management system within Compound. But right now you cannot do it unless you have the token and you delegate that token and so on. So what we do with liquid governance is the liquid governance module gives the ability for the protocol and the community to say, okay, you as a user are going to earn representation as long as you're using the protocol. And you always have the ability to both participate and be represented if you want to. And if it could be actually different stakeholders, it can be the DAO members. You can say the DAO members are going to receive representation as long as they keep working and providing value to the DAO. So it's a very flexible modular system that awards this representation, what we call actual liquid governance shares, to any stakeholder of the protocol. Now, the key piece here is that you can attach any value that you want to the liquid governance shares. It could actually be revenue sharing from the DAO. It could actually be discounts, additional features, premium access to the community. It can be anything you want that is actually tailored to your protocol. In our case, it's more tied towards revenue sharing, discounts on trading fees, governance participation. So there's many ways you can do it. And the beauty is that these liquid governance shares, you can preset a decay. So they don't last forever. They only last as long as you're participating in the protocol.
Okay.
So it's basically providing you a constant snapshot of who has the most skin in the game within your DAO and your protocol. And that is the goal we had with designing this system. Obviously, there's still more to do in the design of the liquid governance as it stands. But our goal for the next, let's say, 12 months to 24 months is to outsource it, open it up to the community, and offer it both in Solidity and Kaido. So any DAO can actually use it and implement it according to their needs. For us, there's an interesting implication that we realized not long ago, which is you could potentially launch a protocol with the liquid governance module.
Okay.
By actually assigning an early representation to the team and the investors and giving it a preset decay.
Wow.
So let's say that you can say, okay, we fundraise some money from the investors, we give you 20% representation that's gonna last 3 years or 5 years, and it will have a natural decay. And we're gonna activate the revenue sharing function. So as the protocol grows, you're gonna be receiving this revenue share and obtaining a return on your investment. But naturally, after some years, whatever amount you decide, your representation will fade away without having any problems about inflation, dumping onto retail. All of that goes away naturally. And same for the team.
That's quite interesting. So what I had a thought in my mind regarding stakeholders, but let's say a market maker, he does provide certain kind of value, but he does have a certain kind of advantages because he's producing, providing liquidity. Could he also increase? Would his governance shares increase because he's providing so much liquidity? Because market makers enter and exit so quickly.
Yeah. So we have a paper coming up. It's probably going to go out in August. It's around the entire reward mechanism for market making and liquidity within the ZKX exchange. It's slightly different what you have in current implementations of awards and rewards mechanisms. It actually analyzes your entire behavior within the exchange. It analyzes your P&L, but it actually rewards your profit and loss, both. So it's an equitable playing field. Even if you lose money, you still are gaining rewards and representation. And it actually doesn't put a premium on trading that has no profit or loss, delta neutral. It does provide, and value volume trading, which is beneficial for the market maker. But it actually balances by analyzing whether you're making profit or loss, which a delta neutral position would not necessarily, end up happening as the account as a whole. And it also values how consistently you're trading. So there's a lot of criteria that is analyzing to give you the rewards and the presentation. Obviously, we need to fine tune it. Our main criteria to design that was to avoid wash trading. But we understand that over time, these market makers are going to have representation on ZKX as long as they're providing liquidity and they're being a healthy player and actor within the ecosystem. Whether they're gonna dominate the entire governance, I don't think so, because we can basically tweak through governance how much representation is being awarded to the different stakeholders. So at the end of the day, we can always balance it more towards the users, towards the node operators, the DAO members. So there's always the opportunity to balance the system according to the different coefficients that we use within the code.
I mean, speaking of market makers, you recently announced your seed round. Congratulations.
Thank you.
And there are a few exchanges and market makers as well, which are your investors. How can they support you in ZKX? Like, market makers are required in exchanges. Are they pledging some support as market makers? Could you maybe disclose something? Or?
They do. There obviously we've talked about it, and there is some understanding that they're going to be participating within ZKX. We're also discussed with them possibilities of creating open vaults for retail users, all of us traders, that they can actually also provide liquidity and benefit from delta neutral strategies. We want to make it a bit more of an open system. So we're discussing multiple options in terms of providing additional liquidity onto the exchange. But obviously, they invested in us, they're our partners, so we expect that we're going to be working with them. And we have relationships with all of the other actors and players in the market making space as well. So it's important for us to cultivate these relationships in the long term and see how they can provide value as well to ZKX.
That would actually be my next point, relationships. You're doing a partners program as well. So what is that exactly?
So we understand that we cannot do this alone. It will be, it's just impossible.
I mean, market makers individual is a little bit difficult.
Yeah, and we need this. Okay, so maybe let's rewind a little bit here. What is for you the definition of success for Starknet?
Excuse me?
What is for you the definition of success for Starknet?
Success for Starknet?
Yeah. How do you see success for Starknet?
A running network, quick, efficient, safe.
So effective technology, right? Technology that works.
Yes, correct.
Gotcha.
In a shorter version, yes.
Got it. So for us, the way we look at it is if we depend on the Starknet ecosystem to capture just users from Ethereum L1, we're going to fail. Our vision here is that Starknet gives us the ability to scale and start competing with the institutions, with centralized crypto, with Web2 in a much more effective way that we didn't have before with L1. So that's why it's so important for us to think about it in a way that, we're not here to capture whatever user is coming in from the bridge, but actually capture users from not only all the other chains, but also from centralized crypto onto Starknet and onto the platforms that are building on Starknet. That's for us, a closer definition to success. Right now you have 100 million, 200 million users that are using centralized crypto. Only about 6 million of them are using Ethereum. So the space for growth is massive. And out of those 6 million that are in Ethereum, only a small portion are using DeFi actively. So the space for growth is massive, but what it also means is that if we're just gonna rely on siphoning off users from Ethereum through the bridge to Starknet to grow, is not going to be sustainable in the long term. That's why the way we see things and look at things is at the bigger picture. What is the entire, user base for crypto in general? How we can port them over into decentralized solutions. We've already seen that centralized crypto has failed. It's not transparent. It doesn't provide, the necessary security and trust for the user. We've seen that the last few months. So the opportunity is there for DeFi institutions and startups and projects to prove themselves that they can actually be more reliable and trustworthy than centralized crypto. But for that, we need to think beyond, just onboarding users from the bridge. We need to actually think about fiat on-ramps, by cross-chain SDKs, by onboarding users from centralized exchanges directly into Starknet accounts. We need to think, across the entire product integration and development, which means that we cannot do this alone. We need everyone else to pull in together so we can actually bring growth to Starknet beyond whatever, pool of available users are on Ethereum. So that's our vision in general, and how we look at things. For us, is not the question mark of, how we can bring these Ethereum users to us, but actually how we can bring 1 million users onto ZKX, how we can bring 10 million users onto Starknet in the long term. As you know, Starkware themselves, they're talking about L3 as a concept that will bring even more scalability. And we think it's very interesting because at the end of the day, at some point in the future, we'll probably have to abstract away the entire blockchain experience for the user. An average person, the people we have actually around us, they don't think that they're using Amazon Web Services.
Yes.
They're not thinking that they're using, a settlement layer when they're using a stock trading app.
I don't even know if average crypto users are notice that a lot of nodes are running on Ethereum nodes.
Exactly. And maybe, the assumption that everyone on a day-to-day basis has to use a wallet like MetaMask is too much. Maybe we need to leverage account abstraction to let them log in with some other form of credentials. Maybe we want 2FA tied up with some email login or some social login. That still has, a decentralized way to hold, the keys and to hold the funds. But we need to give them other ways to onboard and come, onto Starknet. So these are the ideas that we think will help scale and make the ecosystem grow in the long term. So that's why, you asked the question about partners, and I told you it's all about how we put the pieces together so we can take, crypto to the next level and bring even more and more users into DeFi and to decentralized applications. So in that sense, in terms of partners, we're looking at fiat on-ramps, we're looking at, cross-chain SDKs, we're looking at all the different solutions that will help bring this Web2 user onto Web3, believe in the solutions that are being offered, and, actually, start trading without having to think that, okay, I need to remember my 12 words, my 21 words, my private key, my public key,
Once it's gone, it's a little bit
gone, right?
Then, yeah.
So that's our thinking here in terms of building this pipeline of partners and how we can, make it a bigger thing in the long term.
I think today I had a conversation with Motti from Bravos, and so he's also introducing a wallet which might be easier to use for certain kind of users without also remembering the whole 12 words, right?
Yep, that's true. That's true. They're doing great work.
Yeah, that's true. I think, every time if I talk with normal users who never, touched Bitcoin or Ethereum or generally, they're quite scared of it actually, because it can be complicated. Oh, if I lose this, what will happen? Akash, they're calling me, hey, I forgot my keys, help me. And I'm like, bro, you did a wrong transaction, it's gone. But I just copy pasted some random, I don't know, key and
address.
I'm sorry about that. And I was like, well, bro, that's how it is. I'm sorry, it's gone. It's gone. So I think education is very important as well in Web 3.0, for the safety, because people are generally scared because the media kind of portrays crypto maybe as a criminal, or I don't have to tell you, how it is. So I think it's generally education is very important.
It's very important, and facilitating the experience,
Yeah.
right? That there's a certain sense of trust and security in the sense that the average person in a day-to-day basis doesn't have to think about, you know, how are they managing their finances up to the last minute detail, right? That the requirements for a normal user to trade in DeFi are incredibly high.
Yeah.
You know, you need to think about whether the MetaMask is properly set up with the RPC, whether the address is the correct one, whether, you know, you keep your password, your seed phrase, whether, you know, the transaction is going to fail because gas is not enough. There's so much aspects that you need to think just to have, you know, manage your own finances. So we still are, you know, we still have some more progress and development to do to have that level of maturity where we can cater to, you know, the wider range of users that are not necessarily tech savvy as we are. Because at the end of the day, it would be a mistake to think that what we're building is palatable and suitable for everyone. We're building solutions that at the end of the day are designed by early adopters, are designed by tech savvy people who understand the technology. So sometimes we don't necessarily make the best user experience choices, which is fine because the industry is such as an early stage that it requires, you know, solutions that cater as well to us. But in the long term, we need to start thinking about, you know, everyone else and what tools and user experiences they actually need to be able to, you know, onboard into these new technologies. And probably it will look quite different from what we have had in the last 3 years.
I think we made it if the average grammar knows how to use a wallet. That's when we made it, in my opinion.
Yes.
Yeah, I'm really looking forward to how our industry will evolve. And I mean, speaking of ecosystem, how did you like the hackathon, the Starknet hackathon, and January Paris? How was it for you? Everything, the experience?
So there was one takeaway from the hackathon, which was we had a couple teams that came into the hackathon without knowing Cairo.
Okay. Wow.
And by the end of it, they actually coded
Wow.
an MVP with Cairo.
That's
that was
amazing.
Incredible. Yeah. That was incredible.
That's-
That was for us the takeaway.
Yeah. That's gigabrain, actually.
Yeah.
Wow.
Yeah. It's how in 24 hours you can actually start coding in Cairo. Proves that, you know, Cairo is a language that can be used by developers and that is not actually hard to learn.
Yeah. Wow, that's actually, I can't even develop, so I'm like, well, maybe they can teach me some stuff, I don't know.
No, that for sure they can teach us, that's for sure.
Okay, next challenge, Cairo in 24 hours. I can do it. Yeah, I'm really looking forward to Starknet CZ, so it will be a really nice conference.
Yeah. It will be great. It will be great, and it will be interesting to, you know, take the pulse on the ecosystem.
Yeah.
See what people really think about you know, what the work we're all doing, and what's, you know, the next steps forward.
Yeah. So actually, I think that would be it. It was a very nice conversation. We covered most of the important parts.
Awesome.
And thank you very much for
Thank
being
you.
here. And guys, I'll add in all the relevant links down below. And thank you for tuning in. And thank you, Edward, for being here.
Thanks. Thank you very much. It was great.
Yeah.
Appreciate it.
All right. See you guys.
Thank
Bye.
you.